What is happening in the luxury home market with regards to supply, demand, appreciation? What are we likely to see over the next year or so with regards to a housing market forecast in the luxury home market? That's what we're going to dive into in today's video. A lot of viewers have been asking for the last 6 months to a year for me to touch on the luxury market, and I've kind of shied away from it a little bit just because luxury means something different to different people, right? If you're in the middle of the country where the average home price is $150,000, luxury to you might mean $600,000. Whereas here in Orange County, California, where I'm located, our median home price is just over $1 million. So to me, luxury I don't even start to think of the word luxury until we get to maybe 2 million, 2.5 million, just because of where home prices are for the average home buyer in my market. And that's going to seem crazy to a lot of you watching this. And again, that's one reason why I've kind of shied away from it, is because I know I have viewers all over the country watching these videos, and they're going to watch going, who is buying these properties at $1 million, 2, 3, 5, 20 million? And that's what we're going to talk about in today's video. We're going to talk about what we've seen over the last year, 2 years or so, what we've seen in the last 6 months, and what we're likely to see going forward. Because, there's a lot of money out there on the sidelines. I've been talking about it for the last year. But are these people parking their money in real estate, or are they invested in crypto or the stock market? We're going to take a look at some actual data from the Institute for Luxury Home Marketing. They put out a monthly data report with regards to what's happening across the country. We're going to take a look at the markets that they're really focusing on in this report. We're going to talk about, average sales prices, how fast things are moving in these markets as well, to give you a good idea. We're also going to talk about why. Why are people buying luxury property? Why have they purchased luxury property? And this will give you a little bit of insight as to what you're likely to see over the next 6 months to a year or whatever with regards to inflation out there and just all of these different factors that could play into the housing market. Now, even if you're not a luxury home buyer, I think it's important to watch this and understand what's happening in the luxury home level, because I think it's important to understand what's going on in the luxury home market, because the luxury home market is where there's a lot of smart money playing in those games, right? These people aren't making emotional decisions in a lot of ways. They're making logical, long-term decisions, investment decisions when we're talking about, the luxury home market. Now, again, there's a luxury home market and there's the ultra luxury home market. And ultra luxury, we're talking, 10, 20, 30, 50, $100 million in some cases. But this all kind of plays into what we're going to talk about. And we're going to pull up that report and talk about it. And then we're, going to give you a little bit of idea as to what you're going to see over the next 6 months to a year if you're considering buying something that would be considered luxury in your market. So let's take a minute here and pull up this report. Now, as I mentioned initially, luxury means something different to different people depending on where you're located. Now, luxury typically is regardless of your market, is considered the top 10% of homes in a market. Now, in areas like Miami, Florida, San Francisco, Los Angeles, you don't really get luxury homes until you're probably talking $2-3 million. Whereas in the Midwest, again, it could be $500,000 or $600,000. But for this report, they're looking at the top 100 luxury markets across the United States. You can see the majority of them are kind of, on the coast, if you will, with regards to the United States. You have a lot here in California, and you have a lot along the eastern seaboard all the way up to, to Massachusetts, down to Florida, the Miami area. And as I always do, I took a little bit of time to highlight some things that I thought were important in here that we can touch on, to give you a better idea and understanding of the luxury market. But I'll also put a link in the description below that you can follow if you want to read the entire report. One thing I highlight here initially was sales ratio, because some of the data that we're going to look at talks about sales ratio, and it determines what they determine is a buyer's market, what's considered a balanced market, and what's considered a seller's market. So anything below 14% is considered a buyer's market. 15 to 20% is considered a balanced market. Anything above 21% is considered a seller's market. And if you go above 100%, then that means that the number of sales actually exceeds the previous month's inventory. So we'll keep that in mind, when looking at some of the data here. Now, inventory levels in many luxury markets did not reach their typical levels in the spring of 2020 due to the standstill. So understand when we're talking about, sales this year compared to last year, April of last year wasn't a strong month with regards to residential real estate sales, whether it's luxury or, your typical property out there, right? So we're comparing numbers this year to numbers of a year last year, which was probably the worst month of the pandemic as a whole. So you got to take it with a grain of salt, if you will, but understand where the trend is going, right? I mean, I wouldn't show you these numbers if I didn't think they were, a trend moving forward, but understand when we're seeing some of these numbers, there's going to be a big jump because we're, comparing them to April of last year. But they say that, inventory levels in many markets did not reach their typical levels due to the pandemic, while the number of properties listed has increased comparatively this spring. Statistical analysis shows that many are 30 to 50% below their 10-year averages. So while we're seeing more inventory come on the market in the luxury home sector, if you will, we're still 30 to 50%, depending on where you are in the country, below the 10-year averages of the number of homes on the market with regards to luxury. Now, typically luxury homes stay on the market longer than your normal, quote unquote, normal residential real estate, right? Because they're a higher price point. You've typically got less buyers in those price points. So, it takes longer for those properties to sell. And as I mentioned earlier, these are typically logical, buyers. They're not emotional buyers in many cases, just because of how they're buying property and why they're buying some of this property. But overall, based on the data collected from over 100 luxury markets in North America, the comparative numbers for single-family homes over the last 3 years confirms that dramatic decrease in inventory. Comparing April 2021, so this year of April, against the same period last year and in 2019, there's a decrease of almost 40% and 38% respectively. So you see inventory is way less, a third less than it was just last year, actually over a third less of last year and the year before. April 2021 numbers for Miami, single-family homes show a staggering 47%, almost 48% drop in properties listed for sale compared to last year, and nearly 53% compared to 2019. So while last year, again, low numbers because of the pandemic, we're talking nearly 53% from the previous year. So inventory's over half of what it was just 2 years ago. East Bay, California, a lot of you are reaching out from the East Bay, talking about how crazy the housing market is, how many things are selling for over the asking price, 3, 4, 500,000, some cases $1 million over the asking price. It's because another market that has luxury properties, right? And their numbers have decreased by 34% compared to April of last year and 56% compared to April of 2019. Just because there's more buyers in those markets and the inventory is not really building. We go on to talk about Miami again and the East Bay. Miami saw a 526% increase against April of last year in the number of sales with regards to luxury, whereas you saw a 352% versus April of 2019. So the number of sales is up 526% versus last year this time, and up nearly 350% versus 2019. So a lot more people, a lot more transactions are happening, and that's why inventory levels can't build, is because you have more property. And same thing in the East Bay, right? You're seeing East Bay rose 379% versus last year and 67% versus 2019. But why, right? And the same is true for Canada. Canada's been a strong housing market, especially the luxury sector, for a long time. And the report basically talks about that, and I'm not going to dive into Canada at the moment, but why? Why are we seeing the number of luxury properties sell so quickly? Why is the number of people buying them happening. And it's important to remember, right? The growth for the most part has been driven without any help from foreign buyers or investors. So a lot of people think, hey, it's just foreign buyers buying these properties. It's just investors buying these properties. Right now, it's people that live in the United States. A lot of the foreign buyers can't travel right now. They can't travel even from Canada. In order to come to the United States, you have to quarantine for 14 days. And then when you go back, you have to quarantine for 14 days. So it's, and coming from Europe and China and all these people aren't traveling to the United States right now. Now they're starting to, because vaccinations are playing a part. People are getting more comfortable, less restrictions and what have you. So that probably means more sales coming. I don't know. But that's what they say here. So international travel and immigration resumes. This could well create a boom in North America, a second boom. So as restrictions ease on travel, you're going to see more international investors, more international buyers buying property, typically moving, that luxury market continuing to thrive, right? It's going to continue to move up. Who's buying these properties? Millennials, 25 to 39 are a large part of this. And you go, well, how can a 25 to 39-year-old afford a luxury property? Remember, luxury depends on where you're located. But again, there was a lot of money made from high tech, gaming, pharmaceutical. There was a lot of industries that did really, really well in 2020. And there's a lot of money out there on the sidelines. In addition, you've got baby boomers now that have decided to transfer their wealth into some of these luxury markets. And that, baby boomers hold an estimated $68 trillion, that they can invest in real estate. And that's what you're starting to see is these people buying larger properties. Why? Because they have family members moving back in. They need larger properties. They've also decided that, if they're going to be stuck at home, they want to be stuck in a nice property with land in a desirable area. And a lot of those areas are luxury markets. And then you see here, the younger affluent are often bypassing the traditional first home of a city condo, instead purchasing single family homes, especially if they have children, they have to work from home. And that's putting further pressure on that segment of the market, right? Is when you have these buyers that are skipping the initial, first-time home buyer type home and buying luxury property. It's going to continue to push that market up, and essentially that's what you're seeing. So what are we seeing with regards to days on the market, that sort of thing in the luxury market? For attached homes, average is 20 days. For single-family homes, the average is 10 days. Sometimes these homes take hundreds of days to sell property, in some markets, depending on the price, just because there's not that many buyers. Things are moving very, very quickly, as you can see here. Now, what I talked about earlier was that sales ratio, right? If it's a seller's market, it's above 21%. If it's below 14%, it was a buyer's market. Single family homes right now, 73%. Is the sales ratio in this year versus 13% last year. So last year, this time, somewhat of a buyer's market in luxury because of what was happening. People didn't know. Now you're at 73%. And at the same time, the median list price has gone up to $1,767,500. The median sales price is at $1,406,250. You can see the number of active total inventory is down. 26,640 new listings are actually up, but inventory is down because buyer demand, right? The number of people buying property is surging because people don't want to, they want to have a nice property. If they're going to be stuck at home, if they're going to be working from home, and the motivation for many home buyers has changed, right? Versus living in the city, and now they want land, they want to live in the country or in less densely populated areas, so they can get more bang for their buck with regards to property and having kids run around, having more space, all of that stuff. So the median luxury threshold price is $900,000, and the median luxury home sales price is $1,406,250. Markets with the highest median sales price, Los Angeles beach cities at $4,110,000. Then you got Naples at 4.1, Vail at 3.9, Palm Beach towns at 3.897. And markets with the highest sales ratio, you got East Bay at 368%. Austin 226%. So That's why these markets are moving very quickly. Now, talk about, where I'm located here in Orange County. Orange County, you got the median list price at 3.4. You got the median sales price at 2.3. Inventory 595 homes. New listings 208. You had 544 sell. Days on the market. The average is 12, right? As you can go down this list here and look at the market status, all of these markets are sellers markets, right? You got one that's balanced in Vancouver, and you got one in Great Victoria, both Canada, that's considered a buyer's market. Napa County, considered a buyer's market based on this as well. So the question is why? Why are the affluent, why are people buying luxury property? Well, we've talked about motivation, right, to move out of densely populated areas. We also have to think about inflation, right? Inflation is here, it's coming. We don't know really the direction it's going. And the most stable investment out there at the moment is housing, is residential property, right? Most people don't consider their home as an investment, and people buying luxury property often know that, right? That real estate is a long-term investment, and a lot of people made money in 2020. While a lot of people suffered, a lot of people made money, especially those that were wealthy because they own property, right, that appreciated in value. They own stocks that appreciated over that year. And a lot of them have pulled money out of, the stock market at this point and started putting money in, a more stable long-term investment like real estate. And as I mentioned earlier, these aren't emotional decisions. These are logical decisions in many ways. And these are people that are planning to hold property long term because they know over the long haul, property is going to continue to appreciate. And so that's what you're seeing is people are, the smart money, if you will, is putting their money in property. And that's what is likely going to continue to move that market going forward. Now, what I will say is that the luxury market is one of those that often gets hit the hardest when things start to turn, right? Because there's less people buying those properties, less buyers in the luxury home market. But at this time, we're not seeing that, right? People are still considering to buy those properties. In fact, I just listed a property this week at $2.5 million here in my market, and within we've been on the market 3 days, and I already have a full price offer. So that just shows you, and this price in this property is priced a little bit above where I think it should be, and we're still getting full price offer. So there's still money out there buying these properties, and you're going to continue to see that as we move forward, just because people want long-term stable investments. This isn't the the cryptos of the world where people are making short-term gambles, if you will, with regards to putting their money into something. This is smart money looking to hold something for a period of time, and that's what we're seeing, right? And you're going to continue to see that, as I've mentioned. But as I get more information on the luxury home market, would love to know your comments, questions. You can put them below, and I'll get back to you on those. But as we get more information on luxury, I'll continue to put it out there. For now, I appreciate you taking the time to watch. Appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.